for someone who is just looking to get started is find out who is the 80-20 in the market, the 20% that's doing 80% of the deals. And normally out of that 20%, there's several individuals that do host some type of meetup or some type of conference and attend that and then start to get entrenched into that network. And then you can also attend meetups too.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 355. My friend Sterling White is back on the show today. Sterling is an expert at finding off-market multifamily deals, and he's shared some very funny and interesting stories on previous episodes. He also acquired over 500 units, and he now controls over $16 million in assets. If you're looking for fresh ideas on how to get started or level up your own real estate portfolio, you'll definitely benefit from Sterling's wisdom. Sterling is also going to share the new and latest change of direction that he's taken, as well as his outlook on the current state of real estate investing. Sterling, welcome to the show.
Yes, third time's a charm when it comes to that. And I was trying to figure out when you were doing the intro, Brian, which episode is it?
Sterling, you were on episode 163 and 258. You've been a friend of the show for at least 5 years. It's great to have you back. Yeah, tell us about this change in direction. What have you been up to?
Yeah. So one, I moved out here from Indianapolis. I just squeaked there a little bit with my voice. So moved from Indianapolis to now Houston, Texas. So big move since the last time we had spoke. And then also is no longer on the single families. And then also I'm selling off my very last apartment, which is a 156 unit, which is now under contract at this moment in time. And then I will be officially out, but not out. It's just where I'm seeing with the market is, well, getting dry powder ready.
Talk about this outlook on the market. So you are of the mind that now is the time to get out, sell off, and get your powder dry for what's to come next. Tell us, what do you see happening in the market right now, and why are you doing this?
Yeah, I wouldn't necessarily offer that as advice for anyone, but is where I'm seeing in the economic environment is one, the best time that would have been to sell is the beginning of 2022. And then now it's really with the rising of the interest rates still in multifamily with inflation going up rents are going up. But I just don't see this being very sustainable. And when others are greedy, that's the time to be fearful. And that's what I've learned from Warren Buffett.
Rents are going up. You see others getting greedy, like other owners raising rents too fast.
So more on the pricing side with what sellers' expectations are, which I'm one of those sellers and still able to get that. And so many more people wanting to get into multifamily versus when the formal crash did happen, which I was not an investor at that time, but just from all the others who have shared their experiences, it was at a point in time where nobody wanted to touch real estate versus in 2006. It was the very similar sentiment as it is now.
What is going to cause kind of the fallout? What is the end game that you see playing out with people trying to get higher prices for their properties? Is this going to lead to some sort of erosion of the value of those properties?
That is a great question. I wish I did have a crystal ball when it comes to that. I would say, Brian, one of the things is there could be likely a black swan event, such as the rent moratorium, where that caused landlords not being able to evict their tenants, and then they had to get a forbearance to their lenders. So, which in essence, that was just simply kicking the can down the road. So there is that. And then also individuals that have just simply overpaid for properties. And the properties that I've sold, the apartments over the years, I have no clue. I've been operating the property, how someone made that work on the numbers on the other side. So I believe those will also start to come up. So it's just a storm of all these multiple factors that I'm just visually looking at and saying that, okay, based upon all that data, this is where I believe is going to be the conclusion. But I could be wrong.
We've all seen kind of this overexuberance on the part of buyers paying way more than, to you and me, it seems like they should. Like, do the numbers really justify paying this price? You'd have to get a huge rent increase to offset what you're paying. That's been something in the multifamily world I've been struggling with since 2015. How do the buyers justify paying these prices? But yet they've had a lot of success doing that because the prices have kept going up. And what I hear you saying is that, well, at some point the music's going to stop and something's going to cause it to stop. Personally, I thought when COVID first hit, that was what was going to cause the music to stop. It only got the music to play louder and faster.
Well, because we printed off more money, and that was a way to prop up the market too. But that's, yeah.
But you talk about other black swan events, and that's definitely a concern. If you're in a state or a municipality that is considering rent control, if you have people who are calling for rent holidays, which I don't hear so much now, but with the increase in rents, I think that could be something that is on the horizon because rent is becoming unaffordable to a lot of people. Talk about that. Are you seeing, I mean, you moved to Texas, which is the opposite of that. But talk about that dynamic, what you saw from, and tell us again, where did you move from and to, and how that dynamic is playing out in both areas?
So from Indianapolis to Houston, Texas. I always have to say it like with that accent. And one thing, Brian, is they say everything is bigger out here, but the toilet that I have where I live is the same size as the ones back home. So I think I just may have a defective toilet.
That was a mistake.
And so with that is that, yeah, I have because I am a renter, so I own where others pay me, but where I live, I don't actually own, I actually rent. And so from that is I have been seeing the rents go up from a landlord's perspective, from not a landlord, but a tenant's perspective. So that's me on that side.
What other black swan events or things that you're concerned about that have caused you to basically sell off your entire portfolio? You said, as you said, you've got your last property that is under contract right now.
There's that and other black swan events. I would just say the increase in the interest rates is there's going to have to be a concession on one of the sides. Sellers' expectations are still high and have not came down because there is little inventory. And I'm referring more so on the mid-size to larger apartments. So the demand is still there because there has been little supply. But even with, buyers can only start to pay so much with that interest rate. And so it's going to be someone's going to have to give. And over the years, what I've seen is the buyers have been the ones that have been giving in the sense that they've still been able to come up to those prices. But I just don't think it's sustainable. And the seller's going to have to start to come down.
I just had this conversation with someone who's been paying attention to the market more than I. They've been seeing a lot of properties being taken off the market, coming back on the market. Sellers still have unreasonable expectations. And with the Fed continuing to raise interest rates, which is an environment we're in right now as we're recording, there's a good chance that property, even your property, let's talk about that. Is the cake already baked? Do they have their interest rate locked in? Because what we're hearing is today, the Fed may raise it another full point.
That was one of the questions I was just going to ask my partner on that, of them locking the rate. Because there was a fire that happened at the property. So there's all these different factors that ended up. Now we're going back and forth with the insurance company. But that is a great question. I'm actually going to ask them today on that interest rate lock. But they've been in it for 4 or 5 months now, just due to a lot of the back and forth of being under contract. So it's likely they have a rate lock. How long it's been, but I need to check.
Yeah, anybody selling their property right now needs to understand that their buyer may encounter a new circumstances once those interest rates go up, if they haven't already locked them in. Play it out for us, Sterling. Like, you're selling off, you're keeping your powder dry. When and what do you see happening that will allow you to get back in?
That is what I'm still figuring out. And I would just say overall is that the numbers are just not penciling out to where they were in 2016, 2017. So something closer to that, to where you are able to get some cash flow and then also good to great return to the investors. So that's what I would say is that as the market start to shift and start to pencil out the numbers, because my approach, and we had talked about this on several other podcasts, is I always take the direct to owner approach. And from that, and there's a lot of work that's involved with that. And just what I've seen is the ROI just hasn't been there because it's been completely sellers' expectations been on one side of the spectrum. So I took a step back and said, do I continue this amount of effort based upon where I see things going? And then that's where I put a hold on it.
Your special power has been to go direct to owner and bypass kind of the market and the competition and the brokers altogether. And I'm hearing you say that your experience recently has not been as lucrative in that regard. Tell us about some of the conversations you've been having and your hits and misses in trying to go directly to the seller.
They're either not selling or the price. And this was happening years ago too, but there was still some reasonableness within it. And the level of, I wouldn't say motivated owners, but also is the operators, quite a bit of the properties to where there were mom and pop operators are actually now have been purchased by syndicators such as myself. So running into quite a bit of that because the target, my sweet spot is between 70, I would say between 50 to 150 units. So from that, really looking for an owner that is more mom and pop, or they only own 1 or 2 properties and they're looking to get out of the business. But what I've run into is that one, there's really no motivation because they keep seeing things go up, or that's what they have seen. And then 2 is now running into more operators that are actually syndicators that have just bought the property.
So the dynamic has changed on the people who are on the other end of the phone when you make that call. I think the last time we talked was pre-COVID. Do you have any stories, any hits, wins in the past 3 years since we last talked?
There was the 156 unit. I'm trying to think when exactly that was closed, but since then have closed on several small deals. So a 9 unit and then 4 unit, but those were just simply ones that came across too small for myself. So just ended up making a good profit on that by selling it to an end buyer. And mostly over the years have been taking the path of more studying philosophy. So that's one, then going out and traveling. So taking a lot of this time to actually invest more into myself.
Talk about that. I mean, you are investing in yourself. You moved to Texas. Was that for personal reasons, business reasons? I know Texas is kind of a mecca for real estate investors. Did that have anything to do with it? What's behind all that?
So it was a multitude of things, but what really was the driver is I was feeling really comfortable there in Indianapolis. I had some success. I was there all my life, and I started to get into more of a rut, a mental rut. And from that is that there's this voice that came to my head said, why not go ahead and move, or go ahead and figure out a way to change things up. And it was to move was one of the thoughts. And then what came from that is all these different ideas. No, you don't want to leave. You've been here all your life, all this. And then when I've leaned into the fear, that's when I've had my biggest breakthroughs in life. And then was looking at Tampa, Austin, and then Houston made the most sense out of those.
Why Houston, and what kind of fear did you lean into and overcome to get there?
Fear of the unknown. Before I moved to Houston, I had never even been to Houston, interesting enough. And so there was that. And then also leaving out of my comfort zone. All my family's there in Indianapolis. All of the success that I've had is in Indianapolis and then also other parts of the Midwest. So there was that comfort that I was leaning into that fear. And then also a big part of moving out to Houston was the real estate market is you're really able to get the best of both worlds from the appreciation as well as cash flow.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com.
How long have you been in Houston then? And do you feel that you're moving forward on achieving some of the goals that you set in moving there? And what are those goals?
I have been here a year and a half, and on the side of goals for this particular market, have not been able to achieve those on the acquisition side with the number of units that I wanted to get to. And that's, I would place it on the market, but I'll accept responsibility for that. But this is a part of philosophy that I've learned, is that accepting things that I can control and things that I can't control. On the personal side is I have been able to achieve goals from just the overall awareness that I've been able to build over the years. And then just also further understanding myself, some traumas that I may have experienced growing up. Okay, what are triggers that happen? Why do I get triggered by that specific situation? So that's what I would say I've really enjoyed over the years.
If you're not achieving the results that you're trying to achieve, there's something that is not quite optimal in the pieces that are there, the formula or the pieces or the system that you're following.
The software,
the team, there's a breakdown somewhere, and you have to identify that. I'm hearing you say that you're in the process of identifying some of those things. Anything that you are willing to share with us and maybe help some of our listeners come to a similar breakthrough?
Stoicism is one of the philosophies, and also Taoism, but is one accepting that the world, how the world is, and not what I believe it actually should be. And then also, as I mentioned earlier, is understanding the things that I can control and the things that I can't control. Meaning, for the 156 unit that I'm selling, is that it's a really great price that we're getting. It's actually $1 million more than what we had on our 5-year projections. We're 2 years into the project. But then, as right before we're about to get to closing, a fire takes 8 units offline. And then now it's been about a month and a half, 2 months, that we're going back and forth with the insurance company to see what they're going to provide for a payout. But that's one of those things that I could be stressed or all these different things, but I just take a step back and say, hey, that's out of my control. But what I can control is my actual response and reaction to that situation.
Okay, so there are things that happen that are outside of your control, outside of an investor's control. Do you have like a timeline of how you see the market playing out? This kind of over exuberance in pricing now being kind of offset by the increase in interest rates, being offset by other factors that are out there. When do you see the breaking through all of that and getting back into acquisition mode?
I'd say in the next 6 to 8 months is my goal that I have with getting back into acquisitions and starting that back up, and still have those conversations with the owners who I've had previous, where I've been nurturing those relationships over the past 2.5, 3, and even 4 years. But the new outreach to owners, specifically here in Houston and other tertiary markets, or even tertiary markets, then we'll start to build those lists out and then do the outreach.
So you are building your infrastructure right now. You're in outreach mode. You move to Houston. It's a new market. You start networking and connecting. Where do you start? Where does an investor start when they move to a new market, in meeting other people and beginning that outreach?
So one, and this is always a process that I've actually taken, is leveraging bigger pockets and finding the top contributors on that platform. And then also and it may be different for someone who's a little bit newer, but I like to use the 80-20 principle. So who is the actual 20% that's doing 80% of the deals? And then I'll reach out to attend whatever events that they have going on, or see how I can offer some value in exchange, or just initially just provide value to them from the beginning. But more so for someone who is just looking to get started, is find out who is the 80-20 in the market, the 20% that's doing 80% of the deals. And normally out of that 20%, there's several individuals that do host some type of meetup or some type of conference and attend that and then start to get entrenched into that network. And then you can also attend meetups too.
The 20% that are doing 80% of the deals, sometimes it's not so obvious who they are. How do you figure that out? How do you figure out who the 20% are that you want to associate with?
It's just by having conversations. So is one, let's go to bigger pockets you use as an example, is that if you go type in Houston multifamily and you start to go through the threads, you'll start to see the same people that are actually commenting in those specific threads. And then you can click on their bio and see the amount of deals that they're doing. So that's one route. But then even when you reach out to them, that opens that conversation there. And then you can ask them, hey, who is someone you know in this space that's doing quite a bit of volume of deals or is worth connecting with? And then that's how you open it up and start to branch out from there.
It's really interesting to see you have the success and build this portfolio that you have built so far. Very fascinating that you're at this point where you're selling it off now and kind of retrenching and positioning yourself for the next level up. We'll have to have you back on the show in 2 years to see how that goes. What advice do you have for our listeners who are in a similar position, like looking like kind of stuck, maybe plateaued, trying to figure out what is the next step?
That was one of the things I was figuring out because it has been tough over the years. I enjoy finding deals. That's been my go-to, and it's been tough over the years because I haven't been able to do that just where we're at in the market. So I've decided to focus on other areas that I actually do enjoy, such as philosophy. Okay, going out and traveling. Okay, well, if I'm not able to actually do the outreach on the acquisitions, okay, how can I start to build the systems and processes now to be available? I mean, to have ready and hit the ground running once starting that back up. So that's what I would say is that look into other avenues potentially out there. Hopefully you can stay within the same niche and then look to go more in that.
Your favorite hack or app when it comes to real estate investing?
The 80-20 principle. So always just figuring out what is that particular, whatever it's skill or business or process or acquisitions or who to network with is always or even learning about multifamily is what is that 20% of, let's say, lingo? What is the cap rate? What is the NOI? Okay. How do you value the property from the NOI and the cap? Okay. Understand that. That's 20% that. And then the other 80% is just good to know or fluff.
How would someone find out more about you or get a hold of you?
One is sterlingwhiteofficial.com. That is sterlingwhiteofficial.com. And then also I'm on the YouTube. Just type in Sterling White and look for a bald, handsome guy.
Sterling, thanks so much for coming back to the show. I always enjoy our conversations. You're always up to something interesting and very thoughtful. You always put a lot of thought into what you do and how you do it. I'm serious about having you back on the show in the future. I want to know where you are at that point in 2024, 2025. Thanks so much for having this conversation with us today. It's always a pleasure.
Likewise, Brian. Thanks so much for having me on. Third time's a charm.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.